Welcome to the Explainer. Okay, picture this. A world where your savings aren't just numbers in a bank account, but they're actually a new kind of digital gold. And I'm not just talking about individuals. I mean, it's being held by governments and giant corporations. Well, guess what? That's not science fiction. That's the world of Bitcoin in 2026. And today we are diving deep into how this thing, this once fringe tech, has become a massive cornerstone of the entire global financial system. So, back in 2025, Bitcoin didn't just whisper, it absolutely roared. It completely shattered its old records, hitting a mind-blowing $126,000. But look, this wasn't just about the price tag. This was a seismic shift. The whole crypto market just exploded to over $4 trillion. I mean, that's not a market, that's a new era for finance. And you know, that crazy price surge? It wasn't driven by your average Joe hoping to get rich quick. No. This was the result of a fundamental change in who was buying. The days of just retail speculation, well, they're pretty much over. Now we're in the age of institutional and sovereign adoption. The big players are at the table. All right, so let's kick things off with one of the absolute biggest game changers, the official strategic entry of the world's largest economy into the Bitcoin world. And this is where the story gets really, really interesting. For years, the US government would seize Bitcoin and then just sell it off. Not anymore. They completely flipped the script and became a holder. They basically created a digital Fort Knox, a strategic reserve. And that sent a massive signal to the world. This isn't some niche asset anymore. This is a national asset. And the sheer scale of this, it's just mind-boggling. We're talking about an estimated 328,000 Bitcoin. With that move, the US pretty much became the world's largest known public holder of Bitcoin. And that created something the market calls a sovereign floor, kind of a safety net for the price, backed by the most powerful economy on the planet. Huge! But hey, it wasn't just governments that saw which way the wind was blowing. The titans of Wall Street, the same ones who used to call Bitcoin a fad, they were suddenly jumping in with both feet. Okay, get ready for the number that changed everything. $128 billion. That's how much cash poured into US Bitcoin ETFs in a ridiculously short amount of time. The floodgates just swung wide open and a river of traditional money started flowing right into Bitcoin. Suddenly it was easier than ever for literally anyone to invest. And just look at who's leading the charge here. We're talking the biggest names in finance, like BlackRock. Their IBIT fund became an absolute behemoth, managing a massive chunk of all this new capital. This made it super simple and, importantly, safe for the really big investors, like pension funds, to finally get a piece of the Bitcoin action. And this trend didn't stop with Wall Street. No way. Companies themselves started buying up Bitcoin, not just as a speculative investment, but as a way to protect their own treasuries. An incredible 5.5% of all Bitcoin in existence is now sitting on the balance sheets of publicly traded companies. I mean, talk about a vote of confidence. Yeah, more and more companies are treating Bitcoin like digital gold. It's a hedge, a way to shield their cash from the constant threat of inflation. And this whole trend, it was basically kicked off by one company, Strategy, who just went all in on Bitcoin and basically wrote the playbook for everyone else. And I mean, they didn't just dip their toes in the water. Strategy went all in. They essentially transformed their entire company into a bet on Bitcoin's future. They've been buying it up relentlessly, using all sorts of clever financial moves to just keep accumulating more and more. So the US move was definitely a catalyst, but it wasn't happening in a vacuum. A global game of sovereign adoption is now fully underway. You could almost call it a geopolitical race for digital gold. This chart here gives us a really fascinating snapshot of how different countries are approaching this. You've got El Salvador, which is just straight up buying it on the open market. Then there's Bhutan using its clean energy to mine it. And you see other major players like Brazil and Pakistan exploring their own paths. It's a truly global race, and it seems like everyone has a slightly different game plan. You see, the US move was like tossing a huge boulder into a still pond, it creating ripples that spread all across the globe. Once the world's biggest economy basically gave Bitcoin its stamp of approval, every other country had to pay attention. The choice became pretty clear: get on board or risk getting left behind. But, this new golden age for Bitcoin, it's not a sure thing. There are some pretty dark clouds on the horizon, some really serious threats that could potentially bring this whole thing crashing down.
Okay, the biggest, most futuristic threat is something called Q-Day. It sounds like something out of a sci-fi movie, right? It's the hypothetical day when a super powerful quantum computer could finally crack the code that protects every single Bitcoin. And if that happened, well, it could potentially destroy everything. And what's scary is some experts think it could happen a lot sooner than we imagine.
But here's the good news. The smartest minds in the Bitcoin world are already all over this. They're building a defense, a new kind of quantum-proof shield for the entire network. It's absolutely a race against time, but they are determined to stay one step ahead of the threat. Another huge concern you always hear about is Bitcoin's environmental impact. And look, it uses a ton of energy. There's just no denying that. But the story is definitely changing. Today, more than half of all Bitcoin mining is powered by clean energy sources. And get this, in a really surprising twist, miners are actually helping to stabilize power grids by using up excess renewable energy that would otherwise just go to waste. And the final challenge actually is a little bit ironic. See, by becoming a mainstream institutional asset, Bitcoin has also become way more vulnerable to the ups and downs of the traditional financial world. It's now tied to things like interest rates and global economic trends. So yeah, the Wild West days of Bitcoin, they're officially over. Okay, so we've seen the good, the bad, and the quantum. Where does that leave Bitcoin? What does the future actually hold for this revolutionary tech? Let's dive into some of the predictions. All right, in the short term, it's a classic battle between the bulls and the bears. The bulls think the party is just getting started, and they see the price soaring to incredible new heights. The bears, on the other hand, think a major hangover is coming, and they're warning about a potential crash right around the corner. Looking further down the road, though, things get even more exciting. The next halving is coming up in 2028, which will make new Bitcoin even harder to create. You've got some serious analysts predicting a price of $1 million per coin by 2030. And by the 2030s, the network should be fully shielded from that quantum threat we talked about. The future looks incredibly bright, but the road ahead is definitely a long one. But this isn't just about the price. Bitcoin itself is getting a massive upgrade under the hood. Imagine if you could build all sorts of new financial apps right on top of Bitcoin's super secure network, like a new internet, but just for money. That's the future that developers are building as we speak, transforming Bitcoin from just digital gold into this powerful platform for real innovation. And all of this leaves us with one final and really crucial question. Bitcoin has clearly graduated. It's no longer a fringe curiosity, it's a real geopolitical and macroeconomic tool. So as it gets woven deeper and deeper into the fabric of the global system, we have to ask, is it actually fulfilling its original vision as the future of money for everyone? Or is it just becoming a new tool in the future of power for the few?